just finished talking about the accrual basis of accounting. We know we need to use that for GAAP. And that told us that revenues are recorded when they are earned and expenses need to be recorded when they are incurred. So sometimes this happens during the accounting period itself, so during the month, but there are also times when adjusting entries need to be done at the end of the accounting or the reporting period to make sure that all of these expenses and revenues are picked up properly. So over the rest of the chapter, we're going to look at these different types of adjusting entries. So these are the 5 types of entries we'll look at. The first category is prepayments. And the 2 types of entries we'll look at here are prepaid expenses and unearned revenues. That may also be referred to as deferred revenue, but they mean the same thing. So as it says, these are prepayments. So for these 2 types, cash changes hands before. Cash is either paid or received before the revenues or expenses actually are ready to be recognized. The next type is accruals. And under here we see accrued expenses and accrued revenues. So for these types, cash changes hands after revenues are earned and expenses are incurred. So we have this recognition of revenues and expenses, and then the cash is going to either be paid or received after this happens. And amortization or depreciation, this isn't really about cash. It's just the adjustment we do to allocate the cost of PP&E, so property, plants, and equipment or capital assets. It's the process of allocating that cost over the expense of their life. So we're going to look at how that is done. This video, we will focus on prepaid expenses. And these are expenses paid in cash before they are consumed or used. So the benefit will come sometime in the future. We're paying them before we get that benefit. Examples here, we have talked about this a bit in the previous chapters. Example would be prepaid insurance. It's fairly common. Prepaid rent is common. And also supplies is another prepaid amount. So these are amounts paid in cash, but we haven't received the benefit. Because of that, prepaid expenses are assets. Because we know that assets are something that have that future benefit. And over the passage of time, or as we use up these prepaids, that is what is called they expire. So once they expire, that is when they become the actual expenses. And as they become these actual expenses, we need to do an adjusting entry to record that expense. And it's not practical to record this expiration every single day. So adjusting journal entries for prepaids are done at the end of the accounting period. So before the financial statements are prepared. So what that accounting period is depends on when a company is preparing statements. So if they prepare statements every month, we would need to do an adjusting entry every single month if there was one needed. If they prepare them quarterly, we would just do this adjustment quarterly. So we're always doing it before statements are prepared. Okay, so let's look at an example. So this one is an example of prepaid insurance. Because these are typically paid in advance. So often you will pay for a full year at a time when it comes to insurance. For example says on May 1st, 2019, HEC purchases an annual insurance policy for $3,600. So we are recording the journal entry to set this up. So this first entry is nothing new. This is what we learned in our previous chapter. So when they actually purchase that annual insurance policy, the entry is to debit prepaid insurance because it has a future benefit. So we're putting it into this asset account. So prepaid insurance is an asset with future benefit. And we will credit cash because they are paying for this. So this is on May 1st, 2019, to record the payment of the annual insurance policy. Okay, so that's nothing new. Hopefully you guys know that part. Now the second part here says after 1 month has passed, the adjusting entry at May 31st is what? So this happens, our adjusting entries are always at the end of the accounting period. Journal entries up here happen throughout that period as the transaction happens. So this was actually paid on May 1st, so that's when we recorded it. If it was paid on the 15th, we would have a journal entry on that date. Adjusting entries are always that month end or period end entry needed to update the balances. So we need to think about this. If 1 month has passed, that means we've received the benefit for 1 month of time. So we need to recognize that as an expense. So when we do this, we're going to set up a debit into insurance expense. So that is increasing that expense amount. And our credit will be to prepaid insurance. Because we also need to decrease that asset we set up because we've used up a month of this benefit. So we know that it was $3,600 for the full year. So we're going to divide that by 12 months and we get $300 per month. So that will be the amount that we book in our entry, because we are doing this at the end of just that first month. So that is how prepaids work. You're setting up the expense and you're adjusting the asset to the new balance or the balance where the benefit still remains. So if we look at this in T account format, if we were to post all of these entries, so in our asset, we have our debit of $3,600 when we paid for it, and now we're decreasing it by $300. So we've updated the balance for this amount that remains, a benefit. So we still have 11 months left of benefit because that insurance policy still has 11 months to go. And at the end of May, we have $300 in the expense because that is the amount that we've used up the benefit for 1 month. So you can see here, when we do an adjustment for prepaid expenses, it updates the asset amount and the expense. So the old saying, we're killing two birds with one stone. We're making sure both of these amounts are updated based on what's gone on. So what would the impact be on the financial statements if we missed recording this journal entry? So we don't record the adjustment. Therefore, we would just be left with $3,600 and we'd be missing this entry. So we would actually have 0 in expenses. So our assets, if the AGEJE, so that's adjusting journal entry, if it was missed, our assets would be too high. They would be overstated because we didn't get rid of that benefit, and our expenses would be understated. And because our expenses are understated, we know that on the income statement we have our revenues minus expenses. So if our expenses are understated, our net income will be overstated because we wouldn't be deducting enough expenses on the income statement. And we know net income flows into the statement of equity where we're calculating capital. So because of that, our capital balance, that equity amount, would also be overstated. So you can see that if we miss some sort of entry like this, it impacts a lot of our statement. So it's really important to make sure we get all of these entries recorded. Okay, we'll take a look at another example, a supplies example. So on September 2nd, 2019, HEC purchased supplies for $1,500 cash. So again, the journal entry to record this is nothing new. We learned this in our previous chapters. We would debit supplies for the $1,500 and we paid cash, so that is a credit. And remember that this supplies amount is an asset because the amount we purchased, this supplies, is going to be sitting on the shelf waiting for us to use it as time passes. So it hasn't been used yet. It still has a future benefit. So it is in the supplies account, which is an asset. Now, a business is not going to do a journal entry every single time that they use some of the supplies. So if this is some sort of business with an office and this is office supplies, every time an employee takes a pen or some paper gets filled in the printer, they're not going to record an entry for that. That's just way too much work. So what actually will happen is at the end of the accounting period, they'll do a physical count and they'll actually count how much supplies is left. And then we're doing an adjusting entry to make sure our accounts are updated to that amount. So on September 30th, 2019, a physical count of the supplies indicated that $1,000 remained. So we need to record the adjusting entry to update the supplies account. So we can think of this in T account form. So we debited this $1,500 when we purchased it, but it says at the end of the month we did a count and we actually only have $1,000 left. So this is our goal. We need to adjust our account to get to that amount. So it's going down. So clearly we need to credit supplies to adjust it. So we're going to adjust for the difference to get down to that amount. So our credit in this entry will be to supplies. And if we take the $1,500 minus $1,000, we know we need to decrease it by $500 to get to that goal of $1,000 that we're left with. And our debit here is to supplies expense. For that same $500. So that is the amount that we used in the month. We used $500 worth of supplies. We took that benefit. Therefore, we need to record it as an expense. Again, we can see it in T account form here. We have the entry to record the purchase. We use up $500, and this is a big check mark here because we've got the $1,000 left in this asset account. It does say office supplies here. We're left with that amount, which is what we want because that's what we counted. And this $500 here is the amount used. Oops. So we used up $500, that's the expense. So again, this is a prepaid expense. By doing this, we're updating the asset and the expense amount. So we hit both when we do these entries. And it's going to follow the same idea. If this was missed, we would only be sitting, or if the adjusting entry was missed, we wouldn't have these May 31st entries. So our balance would be $1,500, and over here it would be 0. So again, our asset is overstated if we miss this. It's too high, and our expense is understated. So it follows the same here. Assets overstated, expenses understated, which leads to a net income that's overstated and a capital or equity balance that is overstated as well. So these are really important. We need to make sure we're posting these to get our statements accurate so the users can make good decisions. So go ahead, I've posted a practice example. It's right under all of the videos. There's these learning activities that say practice, so you can go find the one that is labeled prepaid expenses and go ahead and try that.